Eurozone has officially emerged from recession. Here with me to discuss this now is Dougal Thomson, who's head of programmes with The Economist. Dougal, you're very welcome.
Hi.
So we're hearing that the Eurozone is growing again.
It is, not by much, but any growth is better than no growth. What we've seen this week are figures that announce that the second leg of the euro area's double-dip recession has come to an end. The Eurozone grew by 0.3% in Q2 of this year, led largely by Germany, which is growing at a decent rate of 0.7%, but also by France, which is up 0.5%, and that's better than many people expected. But what we see is that a lot of the crisis-hit countries are still in recession, but they're declining at a much slower rate than before. So that's the case for Greece, for Italy, and for Spain. And perhaps the most interesting and surprising thing in the figures is that Portugal has actually emerged from recession and is growing at 1.1% after being stuck in decline for more than 2 years. So on the whole, I would say these figures are pretty encouraging, given that just a few weeks ago people were pretty downbeat about Q2 prospects.
Absolutely. And what's behind these better figures?
I think when we write the book on the Eurozone crisis in 10 years' time, we'll look back on Mario Draghi, who's the chief of the European Central Banks, his intervention a year ago to when he stated publicly that the ECB would do whatever it takes to save the euro, namely, if it came to it, buying the bonds from weak governments. He didn't have to make good on that promise ultimately, but I think it began the start of a long, slow healing process. And when you look at the figures now, I mean, Eurozone unemployment hasn't increased since March. Governments have made a degree of progress in reducing their borrowing needs, and tensions over sovereign debt have brought those bond yields down. I think what we could say is that austerity isn't being pushed through at the same pace that it was before.
And is this really the end of the crisis?
Well, Elaine, who's the Vice President of the European Commission, said on Wednesday when he announced these figures that self-congratulatory statements suggesting the crisis over are better kept for another day. And I think that's very true. I think there are lots of reasons why we should keep the corks in the champagne bottles for now. I mean, what I would say is that while the crisis no longer seems acute, it remains chronic, because a lot of the big underlying problems the Eurozone faces remain: very high unemployment, a lot of social dissatisfaction and ongoing political tension, particularly in peripheral Europe, southern Europe. But when you look at that 0.3% growth in the Eurozone, it masks some pretty major internal divisions when you compare what's happening in Germany to what's happening in southern Europe. We don't see that growth extending across Europe yet.
And what's the future outlook?
Well, I don't think anybody would forecast a really robust recovery for the Eurozone anytime soon. The ECB commissioned a survey of forecasters that predicted that growth in 2014 would be less than 1% or around 1%, which doesn't sound like much to get excited about. I mean, it will take better figures than the ones that we've seen to make a real impact on those big endemic problems that the Eurozone faces, namely high unemployment and stressed government finances, because those really will take further significant economic reforms to open up the labour market, to promote competition, to encourage growth. So I would say for Europe, the road ahead remains long and rocky, but we've taken a step in the right direction this week.
Okay, and I want to move on now to the crisis in Egypt. How concerned should investors be?
Well, if the Eurozone news gave us some reasons to be cheerful this week, obviously what's happening in Egypt is quite the opposite. I mean, there the situation is very tense, and you have to think that there's a real danger that more clashes could lead Egypt into a spiral of violence and counter-violence. Further escalation of the problems. The Egyptians themselves are becoming more and more polarized, and ultimately that could lead the country to a state of civil war. I mean, let's hope not. What we see there is that business has basically ground to a halt. The big foreign investors who are there, people like General Motors, Toyota, Shell, Electrolux, They've shut down their operations, closed their offices, the stock market has shut up shop, and bond yields are shooting up as a result.
And can the economy keep going in the short term?
The tourist sector, which Egypt relies on for a big chunk of its revenue, that's going to be hammered, as you would expect. Just in the last 24 hours, Russia and the US have issued warnings telling their citizens not to travel to Egypt. Currently, right now, I heard today there are 50,000 Russians holidaying in Egypt. So that's a big amount of people and a big amount of money coming into the economy that is now seriously at risk. What they have buttressing the economy in the short term is about $12 billion of aid that came in from the oil-rich Gulf countries like Saudi Arabia in the immediate aftermath of former President Morsi's ousting. So the central bank can rely on that to try and keep the currency stable in the short term. But really it's difficult to see a positive future for stocks or for the economy as a whole in the short to medium term. And
is there a way out of this for them?
Well, if the army, who are the people in power, and General al-Sisi is the power behind the throne, if they want a stable and a sort of functional Egypt, then they're going to have to take steps to creating a functional democracy and inclusive politics. They have to find a way of bringing the Islamists back into the system. And in the short term, that means setting out a timetable for parliamentary elections and presidential elections. I guess the question that the people in charge in Egypt need to be asking themselves is whether suppression is really the way to deal with the Muslim Brothers, or whether it simply adds to the mayhem. And nobody likes mayhem.
Dougal, thanks for that, and thank you for joining us today. And that's all we have time for now, but do check back later for further updates and interviews from the Dukascopy TV team. Bye for now.